Well, the Nigerian market down again yesterday. Is this a case similar to Ghana, where we're seeing investors wanting to liquidate their holdings as the festive season approaches?
Well, thank you and good morning. Thank you for having me. We've noticed in recent time that the bourse has been on a downward trend. You remember that last week we had a short week, and the bourse ended on a downward trend towards the end of Wednesday, which was the close of the week. Yesterday wasn't any different, as we rightly expected. Leading up to the festive period, leading up to the Christmas celebrations, we expect that people will want to take whatever profits that they have, or want to get liquidity to be able to have the celebrations for the Christmas period. What we have seen is the bourse shedding on a daily basis. Year to date, the bourse has shed about 33%, and we do not see any quick recoveries leading to the Christmas period.
I guess where equities aren't doing so well, the bond market certainly is looking up, with government announcing that it plans to increase its bond market by fivefold over the next 2 years. Do you think Nigeria has the capacity to deal with this? And also, who in your view will be issuing the bulk of these bonds?
Well, the bond market will definitely ride on the frailties that we've seen from the equity market. We expect that the bond market will continue to grow. We expect to see more of sub-sovereign issuances. You've seen that some states have come up with bonds, notably Imo State, Lagos State, Niger State. We expect more states to come up with bonds in the near future. Also, we expect to see a flurry of corporate bonds coming into the market to utilize the opportunity that exists in the bond market. If you look at the Nigerian bond market, clearly we have bonds being traded at about 15 trillion naira. Now, according to the DMO, this is expected to grow to somewhere about 70 trillion naira in the next 5 years. And we expect that corporates will take the opportunity of dwindling curves. If you look at the yield curve for the government bonds, you find that the rates are at a level that corporates can take opportunity in terms of pricing to issue bonds. We expect that there is capacity for the bond market to grow aggressively and for people to make decent returns from investing in fixed income papers.
Okay, I've only got a short time with you today, so I just wanted to get market sentiment in Nigeria on the story in Ghana, with banks having to essentially increase their minimum reserves to 60 million cedis from 7 million cedis. What are investors saying about this? Because a similar thing kind of happened in Nigeria a couple of years ago.
Well, for the Ghanaian market, what we find is that the Central Bank of Ghana has said that the minimum reserve for banks will grow from 7 million cedis to about 60 million cedis, which is about $42 million. Now, if you look at it critically, if you convert that to naira, it's somewhere in the region of about 6 billion naira. Presently, for the Nigerian banks that are in Ghana, we do not see that as a major issue for the Nigerian banks. You have banks like Zenith Bank, like UBA, Access Bank, Intercontinental also in Ghana. Apart from Intercontinental Bank, which also have had issues in Nigeria, we do not expect that the remaining Nigerian banks in Ghana would have an issue with recapitalizing their subsidiaries up to the tune of about 6 billion naira. Being that the Nigerian banks have negotiated this curve of reconsolidation sometime back in 2005, it's something that we've done, and Nigerian market and Nigerian banks are used to, and is not, we do not consider it to be a big deal for the Nigerian banks. However, it is important that the Ghanaian market learns from what has happened in the Nigerian market, because with this recapitalization would come greater competition, will come people trying to get returns for the amount, for the equity that has been, other equity or debt that has been invested in these banks, and that would lead to banks investing in extremely risky businesses that have higher potential for returns. Now, it's important that the central bank learn from the Nigerian experience, that what has happened in Nigeria do not repeat itself in Ghana.
You mentioned Intercontinental, and a report out yesterday saying that they have in fact recouped $524 million US in bad loans since it was bailed out in August. Where did they get this money from, and what does it mean for Intercontinental's investment case going forward?
Well, for Intercontinental Bank, that is very good news coming out of Intercontinental Bank. As at yesterday, they've said they recovered the equivalent of about 78 billion naira. And their prognosis is that by the end of the year, they would have recovered about 100 billion naira. If you look at the reports that came out of the central bank after the examination by the central bank, it was said that Intercontinental Bank had bad debts of about 200 billion naira. Now, if at the end of the year they are able to recover 50% of that, that for the bank would be good for their business. What we have noticed coming out of the banks that had to look at getting the monies that were owned by their clients is that they've gone to restructure some of these bad loans in such a way that the cash flows of their clients match the repayments. And that is what has led to this massive recoveries that we have seen. Also, the new managements have looked at their risk management platform, their risk management framework, and their risk management processes. And they reject all of this to make sure that they do not repeat the mistakes of the previous management. For Intercontinental Bank, this is good news. We expect to hear much more from Intercontinental Bank as far as recoveries are concerned. We expect also to hear what their plans are as far as recapitalizing the bank. Because remember that the money that was given by the central bank was merely a loan, and they still need to find a way to recapitalize the bank.